Good day to all Inderes TV listeners and viewers. Enento publishes Q2 results today, and on this video we have the CEO and CFO as guests. Welcome.
Thank you.
Thank you.
So we could start off the interview with the traditional highlights of Enento's Q2. If you could give a small recap.
Yes, I will. And I think we had quite an eventful Q2. To start with, I would like to underline that we have had very good development in Finland, but also in Norway and Denmark. So we are continuing our growth in these countries. Finland, we actually have a very good positive trend in general, which I'm also happy to see now. In addition to that, I think I also would like to raise that we have now several new offerings launched during Q2, and those have been both in our core but also in connection to that we are now executing on our strategy that we launched last year. So here you see both PSD2 compliance being a true Nordic offering as well. We continue, if I may take a third area, I think it's also of course good to underline under the circumstances that we are of course continuing also with our cost control and efficiency program, where we have progress to now 90% on a yearly run rate of the total 10 million euro program. So also that one is executing well. Yeah. I have more, but I stop there for now. It was, as I mentioned, it was a quite eventful Q2.
That was a good recap. Regarding the profitability in Q2, you mentioned that there were some costs that were transferred to H2. So how big effect did this have, and what should we expect in H2?
Yeah.
Yeah, I can take this one. Partially it relates to postponement of costs. If we take for example the marketing activity levels, those were still lower in Q2 compared to prior year. But then again, now we have important service launches that have taken place. We also see market environment overall more potential for these new launches, so we plan to invest in future growth, and that will impact our cost levels increasingly, both compared to Q2 but also compared to prior year. We plan to use more money in marketing than what we did last year. On top of that, the service launches that we have taken place, those also come with increased cost base. Revenues continue to be still low, but hopefully we will see growth in the coming quarters then. And then thirdly, the materials and services, there we are experiencing also cost inflation. Government in Finland has been and continues to increase prices in relation to certain data that will increase our cost base going forward. Overall, to summarize, so we continue to expect increasing cost levels when it comes to materials and services. Then when it comes to other operating expenses, instead of the declining levels that we have now seen, thanks to efficiencies and savings, we more expect flattish type of development there.
Okay, the positive credit register was launched in Finland in April. So how has your services related to this been kind of received, and did it have any significant effect on your numbers at this stage?
I would say to start with, how has it been received? I would say well. We have successfully integrated our customers into the register, and actually we also have additional customers now who we have helped to integrate to the Finnish positive credit register. And that has also meant that we have had some positive revenue in connection to that one. So the customers are then sharing, let's take it like this. The customers are happy. We have had some extra revenue in connection to that. The integration has worked well. So far, so good.
Regarding Sweden, something we haven't discussed on these videos yet is the public discussion about over-indebtedness and how to prevent it. One suggestion has been a license-based credit register, and you have mentioned that this isn't the best solution. So in what stage is this conversation at this moment?
Actually, we don't have any news since the last time we discussed this in the earlier quarter. This is still something under evaluation. And we do foresee that there might be more information shared during the autumn. Whether it is a licensed, whether it is a renewal of the discussion of an alternative version, or if it is so that the communication will actually focus on other areas like interest rate cap, we don't know.
You finally gave a guidance for revenues where you expect the revenues to decline from last year, but the H2 development should be better than in H1. So given the worst comparable numbers in H2, you're not expecting the market to pick up radically in H2, or how would you phrase this?
I would phrase it simply like this, that we have seen now a decline of 4% in H1, and we expect a decline in H2 to be less than that.
Okay, so could you maybe talk about the visibility regarding the Swedish market a little bit more? What is the biggest cause of weakness here? Is it the macro or is it structural changes? Are you able to talk about this?
They are combined. The macro leads to structural changes, if I may say it like that. So the macro has changed in a way so that the market don't see it as attractive as earlier. To be in the Swedish consumer credit market, which has led to that some of the lenders has left the market, or we have seen also consolidation of some of the lenders. Now then, secondly, when we see that interest rates will decrease, because that is very likely that we will see several initiatives of the interest rates going down, that will most probably make it more attractive for new customers, the lenders to attract new customers, and by attracting new customers, it will also be more attractive to use the loan brokers, which of course is positive, both of them for us.
Okay. Lastly, we could talk about the M&A outlook. How does the M&A market look like at this stage, and what kind of targets are you looking for at this moment?
We are continuously looking for, so I would like to underline that it's not new in any way. We are continuously looking at M&A, and we are having a pipeline of companies that might add to either the data, or they can add with certain kind of tech connected to either gathering or sharing data, or last but not least, of course, also a customer base could be interesting. Though, to conclude on whether we do an M&A, that value needs to be better than if we are, so to say, developing it ourselves. So far, we have seen that we continue to develop this on our own, most of them, and sometimes we also partner up with suppliers, for example, of data, when we are not ready to do the full investment yet. So M&A is relevant, continues to be relevant, but there are of course also alternatives to the M&A, and we are choosing the path forward which gives the best value for our shareholders.
All right, thank you for your answers, and I hope you all the best for the rest of the year.
Thank you very much.
Thank you.